You know what happens when you have an emotional attachment to investments? You make decisions differently. So emotions can really increase an investment's risk by making the wrong decision. A good example is if I was invested in a company that I had an emotional attachment to and some bad news came out. Would I sell the stock? I mean, probably not, and that's just because I have a personal bias towards them, which is my emotion. There are two proven methods to reduce this emotional investing. The first one is through dollar cost averaging, and I'm sure you've probably heard of it before. This is when you gradually buy into a position. So you set aside a set amount of cash, like $100 or $1,000, and you buy the same stock with the amount of money that you set aside every month or every year. And by doing this, you buy more stock when the stock is cheaper, and you buy less stock when it's more expensive. So this is good during any market because you're buying exactly what your cash could pay for. This also takes the emotion out of the game because by staying on course with the strategy, you don't have to make impulsive buy or sell orders. So if you're interested in this method, dollar cost averaging, you have to keep in mind also that there are fees a little higher, and this is because several buy orders happen over time, which carry more fees than one large buy order. Now the second proven method is simply by diversifying. I'm not talking about diversifying into 1% positions at a time, but I mean, for example, you're going to be emotionally vested in a stock if that stock carries the value worth 80% of your portfolio or 60%. So every single investor would think about that stock because it's almost everything that you own. By diversifying your portfolio, you nullify this attachment effect, and also you create protection for yourself. Even diversifying into 20% increments will make you less emotionally attached to each investment. And right now I have a position with Snapchat that I could be liable for around 60% of my portfolio. And I can handle it because I'm not too emotionally attached to it, but I still am very focused on that position because it's so large. Making decisions that affect your literal net worth, I mean, that's emotionally intensive. And it's emotionally intensive for everyone. I mean, I don't blame you if you are as well. And it takes discipline, and it also takes awareness in what strategy you're using and what your strategy you're aware of. So I use dollar cost averaging when I see value long term in a stock, and it makes myself more calculated with going about executing this investment. So that was the video. I hope you liked it. Make sure you hit the like button. Also comment below if you like these types of animations that I've been doing. I'm working on it because I have yet to do my actual videos of myself talking about this, which is what I plan to do in my studio next month. So make sure you look out for next month when I'm actually doing these videos live, and also this Sunday I'm doing a stock analysis, so look out for that.